Hello everyone and welcome to my morning report chart analysis videos on Thursday 17th of May with me, Rich Perry, market analyst at Hantec Markets. We've got a very sort of consolidation move today. Not really a great deal of direction across markets really. Dollar has sort of broke out in the last couple of days, but just consolidated back again to touch there. You've not really seen too much direction across the euro. A little bit of gains against the yen as we see that the yield differentials continue to sort of pull higher. Look at that 10-year spread between Treasuries and JGBs. That's helping to drive that dollar yen higher. That continues to move today. That's 110.60. That's above the 110.47 level of resistance that had been in place. Interesting also, we're seeing sterling strength. Now sterling has gained on the back of a report in the Telegraph in the UK, a newspaper, that suggested that the UK government is going to be pushing for a softer form of Brexit, with suggesting that it could stay in the customs union after the transition period has finished. So subsequently we're seeing sterling higher today and performing well. We're also seeing the Aussie doing okay. Aussie coming on the back of a mixed set of employment stats for Australia. However, we have seen that the Aussie has gained on the back of that improvement in full-time employment by 22,600, which was higher than this, marginally higher than the 20,000 expected. So yeah, we're seeing sort of a little bit of sort of Aussie and sterling strength, but generally speaking, not a great deal of direction other than that. However, also we are seeing consolidation across indices as well, equity markets, whereby you had gains on Wall Street last night, but that's been tempered slightly with futures back a little bit, and yeah, not a great deal of direction on Asian markets either. So we subsequently have seen very flat moves at the open on European markets today. So that takes me to what we got to look forward to today. Fully Fed and jobless claims, not a great deal, hardly tier 1 in any way, shape or form. However, we've got Fully Fed, which is expected to come back slightly to 21. And jobless claims basically around about the same level as last week. So not a huge amount to shift markets there. Now my chart of the day is the Euro Aussie, which I think is a really important or a really interesting market to watch at the moment, because what we have seen is this downtrend. We saw Euro Aussie sharply lower yesterday. That was the biggest bear candle, about 140 pips down on the day, biggest bear candle that we have seen since, is it January? Was it this one in January? Something like that. I think it was this one. So that is the big breakdown, and you continue in this downtrend lower, but also we've completed this top pattern, which below 57.70. If you measure it back from 61.40, then that gives you a downside target, sort of way below that 156 area, and you're looking at sort of 370 pips, which I think is sort of back towards 154 figure area. So there is certainly a prospect of a test of 156, which were those February lows. But then beyond that, you could see further downside. And also what we've seen today is this blue line here has been broken. That is a long uptrend since March last year. That's been a pretty decent uptrend, and that has been now broken. So a close below that would continue the move lower. Look at the momentum indicators. RSI 31, that is the lowest. Crikey, I'm going to go back even further, since February last year. MACD lines accelerating lower, stochastics negative configuration. This does not look great for the Euro Aussie, does it? So you'd be looking to sell into strength now, I think. You get these little intraday rebounds quite often, but I think selling into strength is the way to play this market. So 57.70 clearly is that old breakdown, and that you've got now a pretty decent band of resistance between 57.20 to 57.70 on any rebound that unwinds this sort of oversold move that we've seen yesterday. So anything back towards sort of 50 area, maybe 60 on the hourly RSI is probably a good chance to sell now. So I think that is a pretty decent chart that looks like it's sort of rolling over, continuing lower. Momentum indicators negative configured, sort of moving averages, all you're sort of moving below all these moving averages that have previously been supportive. Doesn't look all that great. So I wish you good luck in your trading today, and I'll speak to you later.